Okay, good afternoon, everybody. Quite the day today. What is today's date? Today is Tuesday, August 19th. Man, this month, the month of August has been particularly flying by. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I'm out of my AMD short. I'm out of my Reddit short that I put on yesterday. I'm out of the NNE short that I put on yesterday. Everything else should be the same. All right, let's jump in here. Okay, so the SPYs here finished down about 0.5%. The Qs finished down 1.3, 1.4%. The IWM finished down 0.75%. Very notably, the RSP is green. The equal weighted S&P is green by 0.5%. The Dow is green, really small. Um, yeah, so it's interesting. It's interesting that the IWM is down as much as it is with the RSP green. Usually those two track a little bit more closely to each other. I find that most of the time the SPY ends up somewhere in between the performance of the Qs and the IWM. That was not the case today. The SPY again down 0.5%, Q's down 1.3, IWM down 0.75%, but the RSP being green is pretty impressive. And that tells us that we do still have a lot of dispersion underneath the surface here. The weakness in this market, because it certainly felt like a really big, crazy down day, though I know for sure I was typing up some stocks throughout the trading session today and seeing some names that were green. I think I even have one stock that I'm short that was green on the day. And I've got one or two longs that were actually barely negative on the day, which that's good considering that a lot of shorts got slaughtered. So yeah, the RSP finishing up 0.5%, with the Qs finishing down 1.34%. And that really shows you where the damage came from, right? It came from Mag 7, it came from these heavy market cap related stocks, it came from the semiconductors, and obviously that impacts the SPY because it's more equal weighted. So that's why you're seeing the SPY down 0.5%, and the RSP is able to be green because underneath the surface, even though it certainly doesn't feel like it if you're looking at a 5 minute chart of honestly even the SPY, but underneath the surface, we're still dealing with a whole lot of dispersion and rotation. So this seems like a bloodbath, but it only seems like a bloodbath because of what stocks actually went down. When underneath the surface, this really is not a bloodbath. It's really kind of almost a typical trading session, and the SPYs, they did close below 640, but we really only lost one level of support. It's a 0.5% down day in the SPYs. Last I saw at a 0.5% realized vol for the S&P, we're still getting vol control buying that's coming in. So this isn't even enough to create a destabilizing effect on the market. But when you lose the largest market cap weighting stocks that are out there, that obviously has impacts on the indexes, right? So the Qs got hit really hard, the SPYs got hit a little bit, despite the average stock in the market probably is green today, with the RSP being positive. So that is really interesting and impressive. What did TLT do today before I move on? I just want to see for myself. TLT's up 0.5%, and the dollar is trading around that 27.50. Was up small in the day. So let's pop over to the daily chart here and let's look at the indexes on the daily chart. Let's also look at some of these most important stocks. So again, uh, SPY daily chart, which I'm now showing, this is not a big deal. This is not a big deal. We're 8 cents below the first level of support of the S&P. This does not end the bull market. Just because you saw Palantir go down and you saw Nvidia go down, it does not mean that the bull market is inherently over. It could be a little bit of a warning sign. It could lead to something else, especially if we see a continued deterioration in economic numbers, or we see a really hawkish Jerome Powell on Friday. That could really bring the entire market down. But from the perspective of the S&P here, the index, this really is not very much damage at all. I joked at one point, again, because it seemed like the market was down by so much when it was really not down a lot. The ADMA on the daily chart for the SPYs is at 640 spot 59. The price action right now is at 639 spot 91. So we've got ourselves a whopping 70 cents of downside extension from the ADMA on the SPYs. It's nothing. It's nothing. I hardly even would dare to call this like a day to take notice of when you're looking at the SPYs. Maybe it is that way when you look at the NASDAQ and again when you look at some of the leading stocks, but like, that's a big term for anybody who's here, who's newer on the team. We use this term a day to take notice of when you're in like an uptrending market and then you get like an individual candle that's like a negative Maribozu engulfing candle. We call it a day to take notice of because it could signify a real change in the trend. Looking at the SPY daily chart at the end of the day today, I struggle to even call this a day to take notice of. Yeah, fine. We closed 10 cents below the 640 level that we broke out from. That's not the end of the world. We did not negate the full breakout day from August 12th. We did not get below the CPI low, which is at 636. We did not get below the 21 EMA. We did not get anywhere near the first systematic CTA sell trigger, which is down at about uh, what I think it was 631. Now I'm seeing it's more like six. I think it's more like 625. If I'm just going off memory on the chart. Yeah, that's down at like 625, I think. So we're very far away from that triggering. And again, when crash, right? When crash. Let me type it in here. When crash. So I just love to type that sometimes as a joke. Well, one of the like the that like almost most important prerequisite of when crash is when you can begin to trigger the systematic selling along with everything else, right? Because then you get the feedback cycle of selling. And it's the same thing. We're not triggering any of that here with the S&P. If anything, the vol control universe is going to continue to buy because this is just another 0.5% realized day. Um, I am still in a bearish thought process personally, but that stems less from the technicals when I'm looking at the S&P and more from a combination of seasonality and broader economic fundamentals that I find to be significantly concerning as we're beginning to see the impact of tariffs on the economy with some of these more stagflationary type numbers that we've seen a little bit more recently. But looking at this chart of the S&P, this is nothing to be too worried about. Let's have a look at the Qs though and see maybe there's something to read here in terms of the Nasdaq daily candle and the fact that we finally lost some major support levels in some of the biggest leaders. So the Nasdaq is telling you a little bit of a different story than what the SPY is telling you. SPY again, okay, we closed 70 cents below the ADMA on the daily and 8 cents below our first support level. I don't think anybody should be too concerned about that. But the QQQ daily candle here is a little bit more of one of those kind of day to take notice of type of candles. The Qs here are below the low from August 12th. They lost 575 support. They lost the CPI low, the CPI starting point. And today they engulfed a few trading sessions of that up action. It's only into the 21 EMA, so this is also not necessarily the end of the world. But I think that this is something that is a little bit more notable with the weakness in the Qs that you could get some further downside follow through in conjunction with what these leaders are doing. This NVIDIA daily candle is a day to take notice of for the most important stock in the market. It could still get saved by its earnings report. Its earnings report is still over a week away. I think it's Thursday, a week from now. Someone should fact check me on that. But every single morning meeting for like 2 weeks, I've been saying the same thing. Guys, know your levels. It's that 179.50-ish on the downside, like 179 to 180 more broadly, and 183.50 to 184 on the upside. That is the important spots. And if you could really begin to lose this Nvidia, I thought you could really lose the market. And lo and behold, we didn't really lose the S&P because we just rotated into other things because that has just been how this market's been trading. It'll be really curious to see when we get through VIXpiration, which is tomorrow, if that can reduce dispersion a little bit, which is something we've certainly seen in the past, is that correlations sometimes increase. Not only does the market loosen a little bit when you get through OPEX, but correlations sometimes increase a little bit as well. So I'll be curious to see if all of a sudden, this real day to take notice of in NVIDIA breaking a huge support level, closing below the 21 EMA, closing below the 21 EMA for the first time since April 23rd. Um, and it was like half the price. Uh, uh, can lead to something more that begins to impact the S&P a little bit more significantly as we get through expiration and maybe we see those correlations increase. But that is not a good looking candle for the most important stock in the stock market. And, positioning is crowded on the name. It doesn't necessarily make NVIDIA a bad company or Palantir a bad company. It's just that they got a little ahead of themselves, I think, and everybody was in the pool. And that's why the positioning information is so important, right? Um, uh, Knowing, which we've known for a little bit over a month now, probably, like end of July, that NVIDIA was a 10 out of 10 on a positioning scale per Goldman Sachs, that matters when the market finally hits the thing down, right? There's no one left to buy, but there's a lot of people that are left to sell on the break of a support level. So to me, this NVIDIA looks like it's not done. Obviously, we'll see if the market can give us a day two, but this thing looks like it's not done. I'm still very short NVIDIA. I probably covered, I don't know, maybe a fifth of my position, maybe a little bit more than a fifth of my short position in NVIDIA throughout today's trading session. So I've still got some size in that. But NVIDIA breaking lower, very notable. AMD getting crushed. I'm out of this one. My target on it had just been 169, so I'm out of that one. Also ended up working really well. Some of that could be because a little bit of a rotation into Intel with all the news there. I'm seeing Intel close with a really big upside tail on the day as well today. So it doesn't look exactly fantastic. Thanks, John. John M. letting us know August 27th for NVIDIA. Uh, so we'll see. And then the other big one was this destruction in Palantir. Palantir not only filled its earnings gap, but overshot it. We started seeing this weakness come into this name really throughout the week. This is another one. I'm still pretty darn short this Palantir. I probably covered from what I had at highs at 190, or a little bit less than 190. I've probably covered 50% of my position at this point. So I'm looking for probably another, honestly, $15 to $20 worth of downside before I really reassess it. I don't expect that to happen in a straight line. It could. This is another one. I just think that this name was just so crowded at that point on highs. The earnings report that it had was phenomenal, but I didn't think that earnings report justified the valuation it traded at. But valuation also doesn't matter for this stock. But when it comes down, I said it when this thing was in like the mid to upper 160s. I think that 190 high in Palantir, I won't be surprised if that's the high for the stock for the next couple years, to be honest, which that's a big call for the most popular, highest performance stock in the entire stock market right now. But I kind of think that this thing is done unless the market goes into some sort of a wild bull market continuation, which I really don't think is going to happen at this point either. And yeah, just seeing out of the corner of my eyes, you're getting rotation into things that have more value still. I mean, what did UNH do today? I didn't look at it all day. Did nothing, kind of went sideways. But generally speaking, you're seeing some rotation into things that have a little bit more value in their multiples, and that's what's created the under the surface rotation that helped the RSP be green today. The RSP looks fine on this daily chart when we look at this as well. So yeah, I mean, really, really good day for the people who have been trying, and it's been so hard to hammer to the short side these very, very crowded longs that are good companies They've just gotten a little expensive after a crazy move, and everybody owns them. Everybody owns them. So when everybody owns it, there's usually only one thing that can kind of happen. And so we saw a little bit of a breakdown, and we'll see if we get some follow through. But spies look just fine. How's the IWM look? The rest is still fine too. It's not a big deal for the IWM. It's still above 225. You start showing me below 225, I'd be like, okay, that's interesting. You're losing an important breakout level for this thing. It was a huge level, that 225 back in July. Really, in my opinion, it needs to get below the August 12th low in order to be more of a failure. And that August 12th low is still $5 down from where it's trading. So, again, SPYs look fine. IWM looks fine. Qs are noticeably weak, but we're not seeing that in continuation, like time frame continuity across all the indexes. But when you see the leaders get hit this hard, uh, it's something that you want to certainly make note of, because I don't think it's impossible for this to eventually lead to a little bit more of a broader sell-off, especially if we could get some sort of a catalyst from a further weakening of those economic numbers, or maybe from Jerome Powell coming out a little bit hawkish. But otherwise, felt like the sky was falling at certain points today, and honestly, it really wasn't. There's some names out there. I typed up eBay at one point today. Like, look at this eBay. eBay green. This thing's still been flying pretty high, and there was plenty of other ones out there that were still nice and green this morning and throughout the day. So I think that there's actually a decent amount of froth that's still in this market. But we'll see if anything can trigger when crash. When crash. Well, we're still far away, I think, from really triggering when crash, but it could happen while we're far away. It could happen very, very quickly with the right catalyst. So that's all I got. Pretty good P&L day for me. I hope it was a good day for you guys as well. I got out of this Reddit. That was a great RDR call out yesterday that led to a nice little 2-day trade. I got out of this NNE, which was a great 2-day trade to the break of that support. Did OKLO break further? Yeah, OKLO, I didn't take that one. But we called that short out through 70 yesterday as well. That one gave great follow through for anybody who was involved in that. I also got out of AMD. I still have a little bit of the Serve that I shorted yesterday. I still have a little bit of the Jumai that I shorted yesterday. I still have a very little bit of this UUUU. $8 has really been my target. That thing gave another breakout failure through that $10. I still have a little bit of Microsoft short, which we called for the short through 520 yesterday. So, yesterday turned out to be a pretty good day to try to press the short in those relative weak names, because even though the market didn't do anything yesterday, some of those stocks we had noted traded pretty well for us, and then they gave us really good follow through for today. So, I think that's really all I have to say for it. Really curious to see if this leads to contagion that increases correlations as we get through Vixpiration, as we get to Jackson Hole, or if it's just another 1-day anomaly. I mean, you look at the SPY move from highs right now, it felt like such a big down day today. This is not even anything close to like the last day of July, first day of August, 2-day down move that we saw on the non-farm payroll mess. So let's take it into perspective, for sure. Not the end of the world, not a broken market, but let's also note that those leaders breaking down, it does have the potential to lead to increased correlations and broader contagion. And that's as we're going into a further and further seasonally weak period of time when we get into September. So what do we got left here in August? Pulling up my calendar. Yeah, so we've got, a week and a half or so left in the month of August, and then we go into September. The thing about August right now is that you got the buyback buying, right? August is the biggest month for buybacks of the year. But it was interesting to see. I read somewhere, I think this morning, maybe it was in Pat's note, that while there is this huge, trying to find the right words for it, um, buyback authorization amount for 2025. It's at $1.1 trillion or whatever. There is some discretion on how they implement it. So I saw like a stat somewhere this morning that said that even though like the total amount of available corporate buybacks in 2025 is higher than it's ever been in any other year before. In August of this year thus far, it's only been buying at like 0.8x last year. And that's still a big bid, right? Because August is still the biggest bid of the year. But it seems like anybody that's smart is really pushing for it now. And we see that with the hedge funds and how they've been performing. And then I thought it was really interesting to see that the corporates themselves were, they have all of this available stock to be able to buy. And for some reason, they aren't pulling the trigger as big as they could if they wanted to. So that I just thought that that was a little bit interesting and notable. And it's not that they're not doing it; it's just that they could be doing it bigger and they're not. So that's all that I got. I'm happy to answer any questions. Don't they say that without the cues, the general market isn't going anywhere? Meaning cracks in the cues are always a pretty bad look overall. Yeah, well, I mean, it's just that the cues have the largest market cap. So it depends on if you're looking at market cap weighted index or not, which is what we're generally doing when we're looking at the S&P and the Nasdaq. They're market cap weighted. So if you're losing the Qs, it means you're probably losing Mag 7. If you're losing Mag 7, that has a big impact on the S&P as well. But again, underneath the surface, if they're finding value in other places, that's just rotation. So, RSP traded great today. XBI was down a little bit. What about yeah, XHB looks like it was small green on the day. What about utilities? Utilities had a big update today. Consumer staples had a big update today. So those are defensive sectors, right? Staples and utilities. Um, I would note that sometimes in the very, very early phases of a like bear market, not that we're going into a bear market, we had literally one day, but I would note that sometimes in the very, very early phases of a bear market or a deeper correction, they start by buying defensive stocks. And then when you get later into the bear cycle, when margin calls are happening and they need to just sell everything, then they start to sell those down as well. So it's a little bit interesting to see consumer staples and utilities up as much as they are. Um, cool. From Roble, I would love a lower high on Palantir. Yeah, so Palantir at this price, if you want to be short Palantir, uh, and you can't short 156.50 in my opinion, like right now here after hours. That's crazy. This thing just came down from 190 to 156.50, and today alone it went down 16 handles or whatever. Uh, so, you can't just chase price on this. It's interesting because the first four red days there were kind of like dribbling lower. This is like the first real down day. It'll be interesting to see what Palantir does tomorrow. This thing could gap up and trade back into, the low or even mid 160s. That could be executable for like an add back short, or they could just accelerate this thing back down into 150 or even the upper 140s, then give it a really big bounce back from there. So we'll assess this one I think tomorrow morning in more detail when we see how it gaps and how it's trading. Um, yeah, for sure. I definitely get it on wanting to trail. I actually would love a lower high in it, like you're discussing, to be able to add on it. Not that my position is small, but I would add if this thing like gave I don't know. Like I said, let's analyze it tomorrow because I don't feel confident in exactly the path forward for Palantir in the near term in the moment that we're chatting. But if I could get some sort of a lower high in those 160s, like you're describing, mid 160s with an ADMA catch up, that would probably be something I would actually love to add into at this point. But let's take it one step at a time. Let's see how this thing trades tomorrow. Let's see how it gaps tomorrow, and start at that point. Lulu is trading at its lowest PE in 5 years. Is it time to buy? I don't know. I don't really follow this stock super closely, to be honest with you. There's definitely some concerns to be had about retail, because retail is going to face the worst aspects of the tariff situation. We had already seen and I had seen a chart of it. I don't know how to create that chart in my Lightspeed or if there's a specific ETF that they've created. But generally speaking, like I saw a chart that showed like mid-consumer companies, like mid-level consumer related companies. And I don't know if that would include Lulu. Maybe Lulu is a little bit more high end. I'm really not 100% sure. But like companies that people who are middle income people are generally doing their shopping at, whether it's, restaurants or retail or whatever, the recovery from the April lows in those companies is like, I don't even think it's 50% of what the S&P has done. So you're already seeing a huge struggle in those companies, and probably for good reason. And when it comes to value, value, I'm not like a value expert, right? I know enough about multiples and forward multiples to be able to look at Palantir at 183 forward multiple and say, holy cow, this stock is really, really expensive. But I'm not a solid enough fundamentalist to be able to necessarily differentiate a value play from a value trap, right? Sometimes stocks are trading at really low PEs because they deserve to be trading at really low PEs. Because, yeah, it's still a profitable company, but the growth has been declining by so much, or the growth has even gone negative, that that's where you get like the concept of a value trap. And you can have a stock that maybe at one point in the past was a high flyer that stays at a really low PE for a really long time, and that again just becomes what typically is described as a value trap. Honestly, what I'm good at when it comes to value plays is taking ideas from other people. I've got a few friends and I have a couple people that I really like who are great on the valuation side, and I like to just take their ideas on what they like. I think I mentioned for a more public figure, Aswath Damadorian. Hopefully, I'm not overly butchering his name, but I probably am. As an NYU professor, he's like the valuations guru. That would be someone I definitely would say, check out the names that he talks about, the names that if he's in a podcast that he's being questioned about and what he has to say about them. Uh, Aswath Damadorian. Aswath. Uh, there he is. And he has a blog somewhere that you can follow, but he doesn't post in it too often. And he's regular, regularly a guest on a lot of different like financial podcasts. So I'll catch him on some of those sometimes. And if ever I see he's on anything, I always make sure to listen to it because I really want to hear what he has to say. Because the way that he explains value, I think, is phenomenal. So it's definitely one to check out for sure. Um, sorry, just give me one second. I just got filled on a position. Okay. Okay. Uh, where was I? All right. So Lulu, Eddie on TOL. The toll numbers are coming out. All over the place on them. Yeah, I'm not seeing the numbers on the VTF, but looks like the stock is trading down a couple dollars on it. Thoughts on VKTX? I still don't even know what the news was on the VKTX, actually. I asked in the pre-market and no one responded to me, but the stock ticked up to 61 first. And because I'm not in the name, I didn't bother to take the time to look it up if no one was just going to tell me in the moment. But whatever that news was, they ticked it up to 61 before trading it down to 25. So I don't have any feedback for you, Tate, without knowing specifically what that news was that caused this. I got all out of the position into the up move. And then of course, I was kicking myself a little bit when I got out in like the mid 30s and it was continuing up to 42. Um, but yeah, seeing it back down here at 24, it's pretty brutal. I mean, it was just at this price in June, and I was long it at that price in June. But yeah, a lot of people are dropping out of taking the pill due to side effects. Okay, that's not good. 26%. Still trying to give me an image, but for some, oh, there it is. Viking Therapeutics slumps as weight loss pill underwhelms. Help patients lose up to 12.2% of their body weight in a mid-stage study. 28% of patients dropped out of the trial in 3 months, with Mizuho's Jared Waltz saying the thing to consider here is that patients discontinued at a high rate over 13 weeks. Viking stock fell more than 40%. It was announced that it's inferior to Lilly's. Is Lilly's also a pill, though? Um, because I don't know about you. I mean, first of all, you know, it is a pill. Okay, yeah, it's good to know. Um, I don't know. Me personally, I'm not. I don't think I'm a candidate to take any of those weight loss pills. Relatively low body fat, and I've actually lost. So I've been training to hopefully climb Grand Teton in September, which I'm still trying to work out the logistics of that, so it's not 100%. But I've been training all summer for it. I'm down like 13 pounds from where I was, and I wasn't even you know very overweight to begin with. So I'm not a candidate, I don't think, for the weight loss pill. But if I was, um, I am not a huge fan of needles personally. So I feel like I would never actually. Yeah, that's him. Yeah, that's Oswald. He's the man. Um, I know for me personally, if I was a candidate, I don't think I would do it if it required an injection. I don't like needles, especially regular injections. Do it because I have to, when I go to the doctor, but otherwise I'm out. Thanks, Judy. Uh, cool. So scrolling back up here in the VTF. Yeah, so VKTX is not good. Um, that's not good. I'm not getting back in it. I can tell you that. I liked it as a play at a certain point when this thing was kind of basing out here into this $25 area. Everybody loved this stock when it was in the 70s, and then it's at 25 and no one wants to talk about it anymore, and everybody's sitting in it. And then finally it broke out of this base of the upside. I liquidated the position, and man, I can only imagine if I was in it. I'd be like, wow, that hurts. I bet it'll probably bounce back, to be honest, if I had to do something with it. I think it'll bounce back, but I'm not getting involved. Uh, the intermediate trend EMAs are broken and declining now on many leaders and the Qs. So unless we rally back above hard and fast, they will stay in a decline here with new calculations day by day, short rallies in those tickers. Simple, be patient with entries, don't get caught in short covering rallies. Yeah, that's what I was saying. Like, don't get caught chasing price too much in the Palantirs of the world at 156.50. But this chart looks very broken to me, and I love the idea of shorting bounce backs in it appropriately at the right, be patient, get the right execution for it, and that's it. Let's see, did I miss anything else in the VTF? John M on MDT. MDT gap down on a good report. I grabbed a little on the long side. Any thoughts on possible movement in that company? So I didn't look at this report at all. So again, just because of that, like I'm not here to make stuff up. I don't make stuff up. I'd rather say I can't give you an opinion just because I don't have enough information. That's kind of where I stand. I did look at it really briefly pre-market and saw that it traded higher and then came down. And you don't like that type of price action on earnings reports. It was the same thing with Home Depot, but the opposite. Home Depot, which I did not think was a good report, initially traded down and then it went green and then it really went up. I always take a little bit of caution on that when you get a big flip from green to red or red to green all in the pre-market off of a report. Trying to figure out what I'm missing with Home Depot. Like, what did I miss on this? I thought it was a bad report, but it's trading up. And MDT maybe is the opposite. Initially, they traded it higher, then they traded it lower. But you were saying it's a good report, so why did they trade it lower? I can promise, like, trying to figure out the right way to say this without being insulting, because this is not an insult to you, of course, John. But like, if it's a really good report and you're able to recognize that, you're not the only one that's able to recognize that, right? Like obviously, if the numbers beat it, it's a good looking report, but there's something else there that's missing that they took it down on. And the same thing with Home Depot, but the opposite. There's something else there that I'm missing that they took it up on. So in those situations, I tend to be a little bit more gun shy. From Dennis on Yablika Apple. I'm wondering if that's even shortable over 230. I had it. I mentioned it in the morning meeting today as a potential short through 230. And then it was kind of strong compared to the other ones off the open, so just went off my radar. It circles back to what we've been talking about for 2 weeks in this. When we saw that report from Goldman at the end of last month that showed that Nvidia was a 10 out of 10 positioning, Microsoft was a 9.5 out of 10 positioning, Meta was like an 8.5 out of 10 positioning, and Apple was like a 4.5 out of 10 in positioning. I don't find it surprising at all that Apple's the biggest performer here in the month of August, and the others have been weaker when you understand that positioning information. So, and Apple also of $1.1 trillion of scheduled buybacks for the calendar year of 2025. Apple is the point one. Yeah, the Apple buyback is already back. So I don't know. I don't want to like I actually think that Apple's a little overvalued here, just because they haven't been innovating anymore, and their services business is under attack, and their services business is where a lot of the multiple comes from. But I don't want to try to push the stock that's acted strongest this month that's least owned. I want to try to push a Nvidia after it finally broke down and it's a 10 out of 10 in ownership. Thanks for bringing that one up, Dennis. Over on the YouTube, from Apex Joy, do you think CTAs is good for swing short? I don't understand the question. CTAS. I thought you were asking about the CTAs. I think CTAS is good for a swing short. Yeah, 222 3 days ago. It was a good short for a swing because it closed weak and continued. Here on a day one bounce back with a lot of relative strength today, I don't know. I think you need to watch this thing as it gets back to its ADMA on the daily chart to see if it gives some sort of a lower high pattern setup. And if you get the lower high pattern setup into the ADMA on the daily chart, you could try to execute that. And then if it closes weak, then you could swing it short. Could a buyback be balanced by insider selling? So the question from Apex Joy, and this is a great question. Could corporate buybacks be balanced by insider selling? It's funny that you should ask that question. I actually spent a little bit of time this morning chatting with my good buddy Perplexity, asking all sorts of questions about because this is what us market nerds do, asking all sorts of question about stock supply in the market, like stocks uh, shrinking, individual stocks shrinking and increasing, the market shrinking and increasing. And this has actually been a big theme from a market perspective that we probably end up talking about this in an afternoon meeting every 6 months to a year or something like that. But the phenomenon of pretty much my entire trading career, with really only one notable exception, which is late 2020, early 2021. The phenomenon of my entire trading career going back to 2010 is that for pretty much my entire career, the stock market has been shrinking. What does that mean? It means that the overall amount of shares that are tradable across the S&P 500 has become less over time. Well, how is that possible? Well, what's that a function of? So buybacks are one of the ways, probably the most notable way, in which the market shrinks. Apple being the best example of that. I wish I remembered off the top of my head the Apple statistic that got mentioned in the VTF like a week or two ago. It was something about like over the course of the last 12 years, the Apple float has decreased by 44% or something like that. So let's just make it simple for fun and say 50%. So that means that if the amount of shares in Apple 12 years ago was 100 million shares, now the amount of shares in Apple is 50 million shares, and the other 50 million shares the company bought back, right? So the there's less stock. The amount of stock outstanding for Apple, that supply has shrunk over time. So less supply, even equal demand, and the stock is going to be moving up in price. But that phenomenon extends to the entirety of the stock market. So the stock market shrinks due to corporate buybacks and also due to M&A. If a company buys out another company, then you lose the entirety of that float into the entirety of the stock market. A stock market increases due to IPOs, secondary offerings, and um, insider selling, or another way to think about insider selling is just through corporate compensation, right? There are many, many, many companies out there. It's a very commonplace that will offer compensation to their employees, part in cash as a salary or whatever, but part in terms of stock bonuses. And then when you're an employee and you get that stock bonus and you go through the vesting period or whatever, and then you sell it into the market, you are increasing the supply of that stock. So for the market as a whole, over the course of my 15-year career, it has very, very consistently gotten smaller. And it's one of the reasons why you should always be a big picture bull, right? Honestly. If you think, unless you think that the world is going to be crashing to an end or something like that, it always pays to be a big, big picture bull. Not every day, not every month, not every year. There will be down days, down months, and down years. But big, big, big picture, when you think about it, like I just said it, the stock market's been shrinking. That means that there is to some degree a constant bid to the market because there's um, diminished supply. But it's not that way for every stock. Palantir, as an example, um, I don't think they have a buyback at all. If they do, it's very, very, very tiny, but they issue a lot of stock-based compensation. So Palantir is really interesting because not only has it gone up the way that it's gone up, but this is actually a name where that tradable float has been continuously increasing over time. Where another example is Tesla. Tesla for sure has no buyback, and that's another one. I mean, even just look at Elon Musk's compensation himself. It's stock, a lot of it's stock-based comp that he has. Um, and yeah, but I think with Palantir, I don't the amount, right. So so we can get into another conversation about how stock-based compensation incentivizes executives at companies to do everything they can to pump their stock price higher. And that is also one of the reasons why a lot of buybacks exist for a lot of companies, honestly. But Palantir is at the point where the float is still increasing, the tradable float is still increasing because more stock is being issued due to stock-based comp than any tiny buyback that it might have. And Tesla, I think, is even more extreme than that, because Tesla doesn't do any buyback at all. A lot of companies eventually will do their best to at least have a stock buyback that equal weights out the stock-based compensation at a one-to-one. But other companies, obviously like Apple, Apple is buying back way more of their stock than they're delivering out to the company in terms of stock-based comp. So, the stock market is shrinking over time. And not every company is shrinking. Some companies aren't shrinking. They're doing the opposite. They're issuing more stock than they're buying back. But other companies are doing the opposite, and overall the market is getting smaller. So Apex Joy, I think that answers your question. Your question was, could buybacks be balanced by insider selling? From Daddy Trades, good call on Microsoft to the short side. I got out of the calls near the open. I threw that into Meta puts and QQQ. January 570 puts finally printed today. Good stuff. Good stuff, and thanks for the update. Daddy Trades in the house on the YouTube. All right, gang. Anything else for today? A little bit more of an exciting day than yesterday. I wasn't expecting it after yesterday, to be honest. I kind of thought we were going to get a little bit more of a quiet day. And if you look at the RSP, it still was. But these stocks, a lot of them were rocking and rolling. So I will wrap it up there. Have a great night, everybody. See you all tomorrow.